Good morning. Today is Monday, January 13th, and the market we're looking at right here is Kimberly-Clark. Kimberly-Clark. If you recall on Friday, I was talking about going long right in here at about 103.85 as it was breaking up through this tight little inside vertical bar. You see here? Now this is a very, very similar setup to what we had in Biogen the other day. I mean, take a look at this, okay? Biogen was testing this low, right? Tested it right there, created a tight little inside bar, right? The market started to contract, and once it broke up through it, we got a huge move. And look at where we're at now. We're actually testing these highs. All right, so let's just go back quickly to KMB, Kimberly-Clark. Very similar, even though, you know, the pullback is definitely further, right? We've broken down through the blue action zone, the 50 exponential right in here, and this is all occurring between the gray action zones here, okay? If we take it a step further, we can draw our fib extension, our Fibonacci lines. Let's just take it from this low up to the high. So essentially what we've done is we've measured from the August low right in here up to this high put in place in the beginning of November. If you take a look at this, we basically hit that 38.2% retracement. See, each time we hit it, we bounced nicely. We've hit it, we went a little further, bounced, hit it, went a little further. But look at this, the high of Thursday, or Wednesday rather, right here, the high of Wednesday was at that 38.2% retracement. What I like here is not only are we between the 38 and the 50% retracement, but we're in the gray action zone, and the market on Tuesday of last week tested this low, and the market was not able to break through that level. And then we set up the trigger bar being that inside pattern. And again, that high was 103.89. And look at Friday's move. So we broke up through that on Thursday, and then Friday we really had follow through to the upside. So hopefully some of you were able to get in on that. Let's take a look at crude oil. I've been looking at crude oil for a while. The market is testing a major area, I believe. And so this is still on my watch list because I'm not quite ready to get in there to buy the market. Obviously the trend is down. Short term, the trend is down in crude oil. This is the futures contract, turned down right in here. Had a nice move to this low, bounced up right in this gray action zone, right? And we sold off, just as expected. Now, if you recall, these two lines, these two white horizontal lines represent tests of, let's just go back even further, see. We are testing this low. We tested this low here, had quite a run up. Now, a couple days ago, we tested basically these lows right in here. So basically in here, I'm looking for some type of trigger bar, right? I'm looking for a reversal pattern of some sort to get long. So I'm not willing to just buy just because it's testing a major low. I'm looking for one of the two patterns that you hear me talk about quite often. Either that bullish engulfing pattern, like the market just opened up, or that tight little inside bar that we look at quite often as well. So again, this bar, we've had a successful test of these lows. And again, I'm looking for something in here. I'm looking for one of those patterns in here. So again, what I'm looking for is I'm looking for a price pattern. I'm looking for one of two price patterns down here in crude oil. And again, you can either play the futures contract, and what you're looking at right now is the @CL, which is the continuous crude oil contract, right? You could actually play the ETF, which is USO, the United States Oil Fund, right in here. Again, so this is just a kind of a watch here. I'm not doing anything right now, but if I look to do something, I will certainly let you know. I want to show you gold, GLD, just again, the Spider Gold Trust. We've gotten a nice move off these levels. Essentially, I'm looking for the same thing in crude oil, possibly, if we get the setup. So if you recall last week when we had that trade in gold where the market was testing these lows, look at all the while testing the June lows, successful retest, bounced a little bit, came down for a second, created that double bottom right in here, and the market rallied. And so we're sitting right here, we're sitting at the 50 exponential moving average now, and we're testing this high right in here. So I'll be looking for a pattern. And if we were to get a bearish pattern, because look at the short-term trend, well, the trend is down, isn't it, in gold? Even though we hit a double bottom here, doesn't mean we can't sell off here, right? I would expect to sell off, and if we're able to break up, we could break up to that the gray action zone, which would take us even further, which would take us up to about 123 in the GLD ETF. So that's what that's what I'm looking at. Okay, so we've got crude oil. Looking at these levels very carefully. If the market cannot close below these lows and we get some type of pattern to warn us to go long, we certainly will. Kimberly-Clark, KMB. Again, we had some nice follow through on Friday. To be expected. Again, very similar to the Diogen trade that we had a nice trade in last week. All right, the market did open up. We're a little lower, but essentially this year we're pretty flat. Okay, again, this is last year's high. We've been trading down off it in a very tight range, So what I'm looking for, well, again, I don't know what's going to happen. Nobody knows what's going to happen. If the market comes up and tests the high, again, this is SSO. It's an ETF. It's an index fund. It pretty much mirrors the S&P 500. So the market's pretty flat, okay, this year. Okay, we haven't been able to break through January 2nd's high. Pretty much matched it up in here a couple days straight. Although Friday was pretty bullish. I mean, opened and closed in the top quarter of that range. Today we're trading down a little bit. So we've definitely got some indecisiveness going on in here. So this is the range so far. So we're going to look for the market to either break up. I'm assuming if we can close up through Thursday and Friday's high, I would expect a retest of December 31st's high. On the other side of the coin, if we're able to take out January 6th low, I would expect more of a sell-off. Hopefully we can get down to that 50 exponential moving average. Hope that helps. Have a great day. And for those of you that took part in Doc's live webinar this weekend, congratulations. It was a great webinar. Have a great day. Talk to you tomorrow.